Yeah, so today's lesson is going to be pretty simple, and it is going to be one of the important things I'm going to teach you today. As I always say, you have to start your daily bias from the weekly time frame, and then you go to the daily time frame, and then you go to the 4-hour time frame, and then you make sure that the weekly, the daily, and the 4-hour are in sync. They are in agreement. If the weekly is bearish, we want the daily to be bearish. We want the H4 to be bearish. And if the H4 is not clear, then you avoid trading that pair. If the H4 is not clear, there is no need to scale down to H1. You get what I'm trying to say? So after applying your premium and discount on the daily or on the weekly or on the H4, and then choosing your PDRs, now what are you going to wait for? That is what we are going to learn today. Now, after identifying your PDRA, the PDRAs that we are going to use is a fair value gap, which is internal range liquidity, right? Also known as internal range liquidity. Other block is also an internal range liquidity. And then we have a swing point, which is an external range liquidity. And we know that when price takes external range liquidity, it will go for internal range liquidity. After the internal range liquidity, to go for external range liquidity. Or what price is doing is that price is taking liquidity and rebalancing imbalance. You get it? That is all what price does. That is one thing you have to put it in your mind. When you're moving from the weekly, when you're moving from the daily to the 4-hour, and from the 4-hour to the H1, you should know that all what price is doing is that it's raiding liquidity and then it's rebalancing fair value gaps. That is all what price is doing. Now, when price tags our PDRE, what we want to see is the diagram over here, right? Where we have the first candle, and then we have the second candle, take the first candle and close inside. Now, when the second candle tags the PDRE, and then it closes inside this way, it's a signal that the market is reversing, right? There's a reversal signature when a candle closes this way. Sometimes the first candle will come and tag the PDRE, but we are willing to trade from that PDRE when we see this price signature. I hope you are getting what I'm trying to say.
Yes.
So sometimes, not always that the second candle should tag the PDRE. Sometimes the first candle will tag the PDRE, but we want to see the reversal signature. And there's the reversal signature where the second candle will close inside, right? So if we are looking at an example right now, let's go to the daily time frame and let's just look at an example using candle closures to really get what I'm trying to say very well. Let's just do a replay over here really quick, right? So now we could see that when the previous candle closes, when the current candle, right, closes over the previous candle high, when the current candle closes over the previous candle high this way, the following day, we are anticipating the next candle to be what? To take this candle's high, right? But then in this scenario, we have 3 expansion. And when we have 3 continuous expansion candles, then that should tell you that price is willing or price might go into another phase. So when you see 3 expansion candles this way, it is best you wait to see what the next candle will do before you trade, right? Because it is unlikely that the market is going to expand. So let's see. Because this candle took the previous candle's high and closed above it, the next day we are targeting this candle's high. So let's see what the next candle. And you could see that the next candle came for that high and then it closed inside, right? And because that next candle took this previous day's high and then closed inside, the next day we expect the next candle to come for this candle slow. This is what basic candle closures that we are doing, right? And then it didn't. It won't always work all the time. But we could see that still the candle took the previous candle's what high and closed inside, right? It closed inside, signaling that price is willing to continue bearish. So the next day, we still expect the next previous candle to come for this low. So let's see what will happen. And we could see that the next previous candle came for that low, right? That is why I was trying to tell you that you avoid many losses, right? If you try concentrating on the previous daily highs and lows, because these levels can turn price and it will come and hit your TP, and then you'll be frustrated. You'll be like, my price was going in my direction, so how come it turned? That's why I always say you have to wake up and position yourself in the landing section, because the landing section is less manipulative, right? So because it took that candle slow and then it closed inside, you can see it took it right and closed inside. It's trying to tell us that prices will need to go up. Let's see if the next candle will come for this candle side, because that is what we are trying to target. We want the next candle to come for that candle side. So let's see what will happen. And we could see that it happened, right? And the next candle is a bullish candle. So open, low, and then high, and then close. So what did it do? It closed above it, which is trying to tell us that prices will need to continue bullish. And the next day, this is going to be our target. This is basic candle closure. So let's see what will happen. And we came for it, right? And then we had an open high, a open low high, and then close. Looking at this candle, it took the previous candle's high and then it closed inside. So the next day, we are expecting the next candle to come for this, right? To continue bearish. So let's see if the next day is going to continue bearish. It came bearish, all right. It didn't get there, but let's see what the previous candle will do. Okay, so that is where the market goes. So you could see the previous candle came for it. So that should tell you how easy it is to target previous daily highs and lows, right? So that is basic candle closures that I just demonstrated. Basic candle closures, right? So that is the same scenario over here. We could see that, but in this scenario, we want this to happen at a point of interest, which is a fair value gap, another block, or a swing point, or a breakup block. I don't use inversion fair value gap. I don't use that shit. When I'm looking for this, I don't use it. What I usually use is internal range and external range. That is all that I'm using. You get it?
Yeah.
So when the as I just demonstrated, right? When the candle takes the previous candle and it closes inside this way, then we expect the next candle to continue on that way. So if that next candle closes over that previous daily low, then we expect the next four, which will be the fourth candle, to come, and then our target will be here until we reach our main target. You get it? So looking at this scenario, right? You could see that the second candle closed this way. So the next day, I'll be looking to trade the third candle. And when the third candle closed so strongly, I will be looking for the fourth candle to continue, right? And if the fourth candle is going to continue, I want to mark my previous candle this way. And I want the first candle to open, print its what high, and then continue to move. You get what I'm trying to say? If the third candle is going
Yeah.
to continue, I will mark my fib from here to here, and I want this candle to respect that. So I don't want this candle. Okay, we will get there. So in a scenario where the second candle fails after tagging a PDRA, or when we identify our PDRA and the second candle is failing to close inside, then we can wait for more data, right? Because there is not this a reversal signature that we are looking for. The reversal signature we are looking for is the wick and then closing outside. But in this scenario, price is closing over this way. So looking at the basic candle closures I just demonstrated, we'll be targeting this. You get it? Or it closed over. So in that scenario, we are not really sure that this candle two is going to be a reversal, although we've target PDRA. What are we going to wait for? For the third candle to happen. And if the third candle prints and then it forms a strong, you could see how strong it is, a strong bearish candle, then we could mark it and then expect the fourth candle to continue. Also, one thing that you can use is by looking for SMT, right? SMT confirms reversal. So sometimes when your candle two doesn't close inside your first candle's range, you can look for SMT, and that SMT will confirm the reversal for you to trade the third and fourth candle. So all what I'm trying to say is that, okay, let's go to the invalidation first, right? So if the candle is going to continue this way, let's say the second candle to the first candle and close inside. If the candle is going to continue, we want the next candle to respect the upper half of the previous candle. And then we want it to continue in that way. That is for a bullish trend, vice versa for a bearish trend. It becomes invalid, right? When the candle just opens and then it takes, we are in a bearish trend, right? We want the market to target previous daily highs. We want the market to open and then print a low and then go and print a high. But here the market just opened and then it took it and then it turned. So this is an invalid. Get it? We don't want the previous this thing to be taken while the candle is forming. We want the candle to form first and then expand to take it, just like you can see here. You get it? I hope you get it. Hello.
Yes.
So that is it becomes invalid this way. I hope you can hear me.
Hello, I can hear you.
Yes.
Yes,
So
Kevin, I can hear you.
so on our daily time frame, let's say we had this. You get it? We had this candle two close this way. Assuming this third candle is not there, right? We are targeting the previous daily low, right? You go to the H1 time frame to confirm this reversal, and the reversal is confirmed by looking for a change in state of delivery and then displacement. And that displacement happens when price is moving aggressively in one direction. It will be leaving fair value gap. So when you are seeing those fair value gap, when you see a fair value gap, that is a displacement, an aggressive price movement. An aggressive price movement, right? So when it happens this way, that means this candle two has been confirmed, right? And we are looking to trade this third candle on the daily time frame. If you are looking to trade this third candle, then you go to our 4-hour time frame. After we are done confirming the candle two, we go to our 4-hour time frame. And then on our 4-hour time frame, we identify a PD array. And then we want to see the same thing, right? To trade this third candle, we want to see this formation happen on our 4-hour, and then we position ourselves to trade this third candle. You get what I'm trying to say? On the daily time frame, we are trading this third candle, right? But on the 4-hour time frame, we want to see this signature, and then we will focus on trading the third candle so that it will align with the daily time frame. And then to trade the third candle after identifying our 4-hour, the reason why you have to go to the 4-hour is that price is always going to seek 4-hour PD arrays over H1 PD arrays. So you have to look at what the 4-hour is telling you before you go to the H1 time frame. And if you go to the H1 time frame, if you are looking for a classic sell day, sometimes the market will go above the midnight opening, right? That is when Asia accumulates and then landing manipulates. Other times, to the Asia section will do the manipulation itself. In that scenario, the landing might go above the midnight opening, but it won't go and take the Asia high. And sometimes the Asia section will be too large, and then the landing section won't even go above the midnight opening. But classic sell day or classic buy, they want it to be this way. You get it? Uh-huh. And sometimes, right, when you go to the H1 time frame, right, when let's say this is our 4-hour time frame, hope you can see the screen. This is our 4-hour time frame, right?
Yes, I can see.
Now, on this our 4-hour time frame, after identifying this way and going to the H1 time frame, to trade this third candle, right? To trade this third candle, we want it to also happen at an H1 PD array, and we want the same information to happen. That is the second candle taking the first candle and then closing inside. When it happens this way, we go to the 5-minute time frame and then we look to trade. We look to trade to our point of interest. Get it? So you move from the daily, you confirm the candle two on the H1. The next day, you are going to trade the next candle. You go to the H4 time frame, look for this signature. You move to the H1 and then you look for that same signature and then you trade it on the M5 using confirmatory entries. That is when you wait for a first CISD to form, a second CISD to form, and then you enter from there. Sometimes when I'm confused, right, let's say I don't really see what I want to see on the H1 time frame, I can just move using time frame alignments, we know that H4 goes with M15, H1 goes with M5, daily goes with H1. I can just go on the M15 time frame and then trade the H4 candle closures. You get it? Just like demonstrated here. You could see the second candle formed its CISD. And then I waited for another CISD and then you enter. So sometimes that is how I trade it. You get it? Now on your hour H4 time frame, let's say you're trading on the H4 M15 time frame, you still have to apply your internal range liquidity to external range liquidity. Sometimes you see that the target will be small, you can still take it, right? You are just building your accounts slowly, one at a time. So always bear in mind that if you are trading the H4 or the H1, you have to target that external range liquidity you see, because trust me, it can turn price and then to come and hit your stop loss. So we could see here that when price takes an external range liquidity to come to an internal range liquidity, external range liquidity, and then internal range liquidity, you get it. So always apply this on the daily, any time frame at all. You get what I'm trying to say. So yeah, so let's look at an example. I think I saw a perfect trade on Euro card. Euro card. My network is full. Do you have any question? You can ask. Hello.
Oh, application. That you mostly don't trade the uh, euro and the.
Hello. Yeah, you were saying something.
Hello, Kevin.
Yeah, you were saying something.
Please, can you hear me?
Yeah, I can hear you.
Yes,
Hello.
I was saying I realized that mostly you don't trade the euro USD and the pound USD pair. Mostly you trade the yen pair, the yen pairs.
Oh yeah, yeah. But you can trade them. Before you trade them, you have to perform analysis on DXY and then you trade them. The reason why I don't usually trade them is because mostly I don't get time at all to do analysis on DSY. You get it? I just wake up in the morning and then I try to trade as quick as possible because I have to go and do other things or go somewhere. Get it? But if I'm at the house, I trade it. So when I get to the house,
Okay.
you get to see that I'll be trading it. So as I said, you always start from the weekly time frame. So when you come to Euro card, right, you could clearly see that here the market was in a downtrend and now the market is trying to turn bullish. And we could see a first candle with a second candle closing inside, right? So let's look at the left. Is there any point of interest that is supporting this? Yeah, so we could see that price has raided an external range to there is enough separation. Get it? Uh, Price has raided an external range to over there, and the candle is closing inside, right? So looking at this, we are expecting the candle to go bullish due to what we are seeing on the weekly time frame. So you first predict the direction of the weekly candle and then use the daily candle closures. Yeah, and then you use the daily candle closures to find the direction of price, right? So when you come to the daily time frame, right? Yeah, hello. I think my network is. Hope you can hear me, right? Hello, I hope you can hear me.
Yes, I can hear you now.
Yeah, so on the weekly,
Yes, I can hear you now.
you can use the daily candle closures to, I mean, to to find your direction and how you're going to trade. So let's look at now. I could see that the second candle didn't really do us. We rated an external range liquidity, right? And then the second candle didn't close inside. So what was I waiting for? For more data. And then the data that came, we had a strong bearish candle. This is not a strong candle. So I think you can see the difference between strong candles. This is not a strong candle. This is a strong candle. A strong candle, a strong candle, a strong candle, a very strong candle. So we had that strong candle. We had one, two, three, right? So I focus on trading the fourth and then the fifth candle, right? So in this scenario, if we were to trade the fourth candle, right, after waiting for three candles to form, and then we are focusing on trading the fourth and fifth candle because the candle two didn't close inside the range. Hope you get it. I hope you get it. So the network please. Yeah, hello, Charlie. I'm really sorry. Network problems. I just don't know why. I hope you can hear me. Hello, hello,
Hello, bro. The network there is bad power.
yeah, I mean,
I
my
I can't
MTN,
hear I
my
can't
M,
hear anything at all.
yeah, hello. Hope you can hear me now.
Yes, I can hear you now.
Ah, Charlie. I mean, I'm working on getting a new MTN SIM, but my old one is some way. So that's why I'm using Teleson. So that was on Thursday, right? Yeah, that was on Thursday. So after the daily time frame, let's go to the 4 hour time frame. Let's discuss what is happening. It's what happened. Hello.
Hello, Kevin. I'm here.
Oh, okay, okay, okay. Yeah, can you hear me now? Yeah, so that was on Thursday. The fourth candle was on Thursday. So
Yes, I can hear you.
you go to the H4 time frame, right? And let's look at how Thursday printed. So you could see that Thursday started from somewhere here. Yeah. Thursday started from somewhere here. This was at 13, which is 1 p.m. Right. So we could see that on the 4 hour time frame, we could see that we took an external range liquidity. And after taking external range liquidity, you will go to internal range liquidity, right? So we took an external range liquidity, and then we came up and then we took this external range liquidity, right? So when price is done taking this external range liquidity, we had kind of an order block here or something like that, something of that sort, another block over here. Let's look at what was happening on GBP CAD. It wasn't that clear, but we took that. That was on Thursday. We took that and then we went higher. And then take this. Okay. Let's go back and look at what is happening. Yeah, so now when we come to the 4 hour time frame, we are trading the Thursday, which is the third candle. You could see that we are waiting for the same scenario, right? So we had our first candle, and then we had the second candle take it and then close inside. So we'll be looking to trade this third and fourth candle to our point of interest. And I think that was even late. I don't know if we were trading inside a kill zone, but we don't want to trade outside a kill zone. That is one thing we don't want to do. And I think everything happened outside the kill zone. This was Asia, London, New York, which means on Thursday there will be no trade for us, right? Because everything happened outside the kill zone. So since we formed, let's go to the daily time frame. Since we formed that swing point, which a swing point signals a reversal, we'll be focusing on trading the fourth candle, right? Because we couldn't defeat candle, and then this will be our target. So we are trading this fourth candle. Now let's go to the H4 time frame. Get it? And then on the H4 time frame, you see that we took an external range liquidity. And after taking an external range liquidity, price to go for internal range liquidity. And I think there was this fair value gap over here. That price came for after taking this external range liquidity. Price went for that internal range liquidity. And what did we see? The price signature that we want to see. But in this scenario, right, the candle didn't close inside, right? So what can we do to make sure that maybe it's a reversal? We can look for SMT by using its correlated pair, right? Let's see if there was any SMT. This was the candle, and then it took this candle. And so there was SMT, which showed that this is a reversal candle. So that was our SMT. So we could trade this, right? And that happened at what time? That was on Friday at 5. Okay, so we were in a Q zone. So after that, we go to the 1 hour time frame, and then we look at the 1 hour time frame. Here was where the SMT was. And on the 1 hour time frame, we saw our candle closure. We saw this first candle with the second candle taking the first candle's high. We saw this, right? So we go down to the M5 time frame, and then we confirm the candle CISD. And we were trading the New York Q zone. We're in the New York section. So this was our CISD, which was confirmed over here rather. But we had that candle closure over there. And this was our second CISD, right? Our second CISD. We could have entered this. This was a low risk. You could have entered by its risk, or you could wait for more confirmation. And then we are going to target an H1 external range liquidity or anything like that. So let's see what was on the H1, right? This H1, we went for that, and then we came down. There was this external range liquidity that we could target. Or after identifying the CIS, we could mark the manipulation, right? We could mark our manipulation, we could project it by marking it from this high to the low that printed that high. And then mostly when price reaches the -2, -2.5, that is where reversal usually happens. The market will reverse and then continue moving down. So that was the projection. So we want to find liquidity levels that align with the projections, right? Because we don't want to just target the projections. We want to target liquidity levels. And here we could see that we kind of had an order block or something, or a CISD or something that was aligned with the -2 to -2.5, right? Which was this. So we could have targeted that, right? Okay, so we go to the M5, right? And then our entry would have been here, this short position. And then we will target the -2. You could see when price got there, you could see what it did. Yeah, the -2 side is always kind of a reversal. We could target, yes, place our stop loss at the strength points. And then let's target that. So yeah, that would have been your trade. And there is a CISD because it tagged a fair value gap, and then we had that candle closure. A CISD, one way is that CISD gets formed is when it raises liquidity or when it tags a point of interest. You get it? Do you have any questions?
Yes.
Do you have any questions?
Oh, no, please.
Yeah,
No,
so
please.
we took this trade inside the Q zone, right? We were in the Q zone, and then we took that trade inside that Q zone. We were in the Q zone, and then we entered. Yes. And what time was it? 9. We were still in the Q zone, but it's 10 at 10, and then we had that. And even the candles still continue, price still continued. So if I'm to still trade this, I can look to trade to the -4 to -4.5, which kind of aligns with the daily targets. Yeah. So we'll end here, and then I'll send the recorded video to you. See you again next time.
Okay. Thank you.
Okay.